Okay, let's go ahead and get started. We just got back from the opening round of games for our league, and the U19 girls won 3-2, and the U16 girls won 7-1 against a hated rival. We don't hate them; we just don't like their coach. What made this one special was I brought some girls over from another team from last year, and they've never won a game. Difference of opinion in how to coach them. Previous coach kind of just had them concentrating on fitness and really never developed technique and skill and whatnot. And I teach technique and skill, and then we get fitness while we're playing with the ball. So we, 1,000 touches a practice, and it really made a difference. Some of the girls were darn near in tears because they were so happy to have won a game finally, and so we got something good going on with this group of girls. They really are bonding well, and the season's off to a good start. So here we go. Let's see here. All right, so the market has moved into bullish volatile. I should say this is the weekend report review for August 17th, 2014. Market has moved into bullish volatile. That's still favorable for the long side. However, it does caution us about the volatile nature of this market. It's not as favorable as bull normal or bull quiet, but it's still on net is a good place to be. To me, that means shorten up our time horizons, and a bird in the hand is worth two in the bush. Looking at the long-term trend, weekly RSI 14, we're at 62 out of 100, so we're just in the higher end of neutral. On a 10-day basis, using the 10-day NDX, we're at 85 out of 100, so slightly overbought. Looking at the market mosaic, we see price with respect to the 200-day moving average is red bullish at 5.41%. That means we got just about 3.5% to cushion to the sideways market. It's red, meaning that this is among the worst 15% readings in the past 6 months. So this is one of the worst of the last 6 months in terms of price relative to the 200. The slope of the 50 is also red at 0.12, which means it's one of the worst slopes that we've seen in 6 months. ADX 14 is at 26.8, so we have a strong trending market right now. Not overly strong, though. It can get as high as 35 before we start worrying about really extreme readings in the S&P. ATR percentage just nudged over 1% at 1.04, which makes it volatile. Now, the risk index is the 30-period moving average of the VIX divided by the 10-period. A reading of 1.0 is the boundary between risk on and risk off. The current reading is at 0.93, which is a risk off condition. It was much worse last week. If we take that score of 0.93 and compare it to the last 5,000 trading days and find the standard deviation, we then can compute the risk Z score. Right now, that reading of 0.93 equates to a Z-score of minus 0.98. You can see a time series of the last 90 days here. And what you should notice is that how improved that risk Z has gotten in the last 5 days. Now, we happen to mention on the last webinar that this reading of minus 2Z in the risk Z was really an extreme condition, and that should we get some upward tick here and a reversion to the mean, that could set up a very nice intraday and a nice swing trade in XIV. And so I want to show that right now, why we say that. All right, so this is a chart framework. We call them the regression line fractal framework, RLFF, just to show the point here. Let's see here, color blue. All right, so what we've got is this is a 2-hour chart, and the symbol is XIV, as you can see. That's the inverse VIX. And so the this purple line is the 270 period regression line, and the blue line that you see here, that blue line is the 10 period regression line. And last week during the webinar we said this looked like an extreme reading here in that blue circle. That corresponded to when the risk index, the risk Z, was at minus 2.03 standard deviations. It also coincided with an extreme reading in terms of distance from the 270 regression line down to the 10 period regression line. That indicates what we think of as the RLFF opportunity. And so what we look for is some evidence of price reversion with a stop. We look for a stop down below the swing low, and then we look for some kind of price reversion back to the what we consider to be fair value. And so we could take crossing the 90 period regression line, that's the 90 RL right there, RL 90 in green. And so with an entry somewhere around 37 or 37.20, with the stop down here around 35.20, even with a 2-point risk on a swing trade, our price target is up here around 45.60, and so that's a $8 move potential on a $2 risk. And so this trade frame in the RLF framework gives us a 4-to-1 reward to risk. Now what happens on the swing is it actually follows through, and we get a nice move up here to as high as 43.20, which is even if you're using the 2-point risk, that's a 3R in hand. And then if you take your exit here at the signal of the RLFF around 42, you're still holding 2.5, almost 3R. So the other thing that coincided with this extreme reading in the volatility index was a day when just about every index there was signaling on a channeling and an overreaction signal, which is really a market condition which says that everything in the market has pulled back sharply and to a tradable perspective. And so really all of those trades this week worked because the market responded the way the market ordinarily does in a bull market on a pullback, and that is makes a nice retracement. And now I'm still holding out hope for this 45, but I've closed the door on this particular trade, and I've got some market money in hand, and now I'm ready to put a stop down here around 40.40 or 40.50, and if we should get any kind of price action working tomorrow, that I'll be back on that as a continuation pattern with markets money. So the main essence of this regression line fractal framework idea is that we treat the RL270, in this case on 2-hour charts, as a long-term fair value. Long-term fair value. And we see the price deviation from fair value in terms of the 10 period. And so when we see extreme readings like this and like this, we then just frame these as opportunities for short-term recoveries back to fair value. Now this ribbon-looking object over here is nothing more than a Bollinger Band, 30 period, and plus or minus 1 on the 270 regression line itself. And so I really look at that as a noise barrier to the upside. So we got the slope of the 270 pointing downward, And it really, in my view, I have to see a price better than 45.60 to really be convinced that the next leg is up. I just see this as a correction back to what is fair value. The opportunity is over, but if it gets through that little barrier and gets above this 45.60 region, then I'm gathering evidence that it's more convincing to me that the market could continue. So in a nutshell, that's the regression line fractal framework using 2-hour charts and symbol XIV, and all set up by that risk Z. That's on page 1. Let's get back to that here, if we can. Yeah. Okay, so again, what we talked about last week at this time was when that rollover occurs, that this move from an extreme reading at -2 offers some interesting intraday and swing trade possibilities. And now the thing to notice is that the risk Z has only gotten back to -1, -0.98. So there's still considerable room for it to get back to the 0 line. So that's why I'm continuing to stalk XIV. Okay, let's back to our regularly scheduled program. So blended monthly continues to hold these symbols that you see here, with the next reevaluation due on or about 1 September. And then the current leaders simply shows what the leading candidates are in each of these different populations. China is looking really strong these days, as we'll see a little bit later. Intel in the Dow, and Hewlett-Packard, Microsoft, Alcoa. In ETF2, the theoretical exposure is at 70%. The model portfolio is at 60%. This is just a quick look at the 13 and 32 ETF portfolio, so you can see the winners. Now we're back to just EFA now being on a cash position. And that's price relative to its own 4-month moving average. And then in the 32, it's just the Russell and the utilities. And let's see, we have a half a dozen other ones on a cash signal as well. Basically the commodities, agriculture, Europe, emerging Europe, EFA, Dow Industrials, utilities, and the Russell, all the weaker end on cash positions. But leading the way, China, U.S. tech, the BRIC countries, and technology. So those are the 4, and Brazil is right up there as well. Those have the juice right now. Looking at ETF Max next. We continue to be dominated by everything India. The top 5 are India, and then China comes in with FXI, China Materials, Golden Dragons. Biotech is the first U.S. Indicated section. And you can see how China is catching up. Financials, all caps, S&P China, GXC. China Industrials, China and India. So basically, it'd be hard to go wrong with the BRICS right now, the EEB, or just looking at any of the India funds along with a mix of China. Those are favored short-term targets for my for intraday and short swings. Looking at the S&P 500 next through this BMR lens. U.S. Steel has maintained its breakout. It had a nice gap up and continues to break out. It's looking like a growth stock. We'll see that when we look at charts of interest. Intel has been awesome. Chipotle and Williams as well. And then in the sector, you can simply see which of the sector spiders these guys are components of. I'm interested in International Game and Vertex and Netflix because of the fact that they're green in the 3-month and then white on the 6-month. That suggests to me that they are early in their life cycle for outperformance. That's how I'm using that that chart. Next up is the market health check. All right, so the vertical blue lines are 10, 20, and 30 days worth of look back. The horizontal pink lines are price targets that have held as resistance in the past, but which now should act as support now that they've been breached. So this one here at 194, in my view, becomes a really important question mark. Can the market hold above this 194 level? If so, then the upside play is really suggested. If it can't, then these horizontal red lines act as price targets on the way down. So I'd be looking at 192, 190, 89, 87, and then 85, backed by the 200-day moving average right here. You can see how the slope of the 30-period regression line has started to hook back up. That's a favorable condition. I take that as a positive sign. It has to get above this zero line. If that slope line were to get above this zero line, then as we read it on this side, then the slope of that 30-period regression line would then swing back positive, and that's a favorable sign. So we've got the 10-period regression line is this blue line, which is pointing up because of that nice bounce over the last 5 days. The 30-period regression line is the black line. The outer lines in each case are the channel formed by the maximum excursion from the regression line during the look-back period. Sort of defines a local normal range using the RAF. That's the RAF regression channel. The dark blue shaded area is the river. That's the 30-period Bollinger Band plus or minus 1. The outer lighter shaded blue is the Bollinger Band plus or minus 2. That's the floodplain. This pink looking ribbon in the middle is the dragon. That's the 10-period Bollinger Band plus or minus a half. You can see that it has turned and is pointing back up. I take that and the fact that the 10 regression line is up to be very favorable. We've got price crossed the Bollinger Band mean. Held support there Friday, and now we're postured to make a test of 199. If it doesn't make that and starts to fail, then what we have is the beginning of a lazy W working in the other direction. So we would have an up, a down, a lower high, and if it goes lower, then I'm thinking the nice price target is down here around 187. So if we get a failure, I'm looking for this move down to test the 200-period moving average and this cluster of support over here right around 187. This price level would not violate the bull market because that'd be about a 7% pullback from this swing high. This move is 7%. But I take this last week to be a favorable sign of the market's finding strength. So I'm optimistic here. All right, moving on. You can see in the ETF2 regional report is up next. We have the S&P is better than EFA. The S&P at 70 is better than EFA at 65. So U.S. is favored over the rest of the world. We've got 1, 2, and 3 indexes on a cash position. That puts us at 70% invested, 30% cash. Inside the U.S., the strength is technology at 75, then the large caps at 70, then mid caps at 68, and small caps at 67. The two strongest sectors are emerging markets and technology. The two weakest are U.S. small caps and then the Euro-Asia globals. Inside the U.S., only industrials and utilities are below average for weakness there. Everything else is above average in the white in the strength column. And we're looking at strength in technology, healthcare, and energy. Moving on. World market model is up next. Technology is above average in the U.S. The S&P and then the mid caps, a couple are above average. Everything else, including all the small caps, are below average. Japan and Asia less Japan are above average. Everything Europe is below average. You can see all the weakness in the European countries is broad-based. Strength in the Asian countries is also broad-based, led by China, Hong Kong, Taiwan, India, Thailand. Latin America and emerging markets well above average, with Brazil doing exceptionally well. Okay, we're going to shift now to the daily report. All right, so no signals in overreaction or channeling. Those all fired earlier last week and all turned in excellent performances, just like they're supposed to. See, we've got channeling and overreaction signals in Cisco, so we'll take a look at that chart. The VIX is a triple screen in a 551W, as well as being a auto framer, as is silver and agriculture. Now the trend is still strong using ADX as a measure, but you can see that the bulls have started to catch back up to the bears, so that the strength of that bearish trend is already starting to deplete. You can see over about the last 40 to 50 days the increase in volatility that has now taken us up into bull volatile conditions. Next up is the Dow Tactical. No signals to speak of in the Dow except for that channeling and overreaction in Cisco. Cisco is nice because it's 3.7 to 1 in frog quality number. It's 6 on the RSI2. And you'll notice that we have the other frog candidates, IBM, Goldman Sachs, Boeing, and Caterpillar. The big percent winners on Friday: Intel, Disney, that should read Disney, not C, Coca-Cola, and Microsoft. You can be hard pressed to find three better ones in the Dow than that. Three must-owns. Weakness was in GE, Johnson & Johnson, and Visa. About the same look in the ETF tactical summary. We have a handful of frog candidates: TBC, Latin America, the Russell Small Caps, and U.S. real estate all come in at better than 3-1 on the frog. The VIX tests out at 2.4-1 on the auto framer and has an RSI2 value of 2. So that's got to be on our list. Oil and silver are both among the top 5 MPRCs. Oil was up, silver was down on Friday. Only a handful of candidates here in the auto framer. Up next. And you have the VIX, silver, and DBA. You can see the reward to risk ratio, and then all of the framing data is provided along with different choices on risk levels. In the regression line fractal framework, these ones in the green are the ones that are the most numbers of their own ATR below their own regression line 270. So these are things that are short-term, oversold, and then have at least 2 ATRs to recover back to what we think of as long-term fair value. So we're thinking of things like United Tech, McDonald's, American Express, Visa, and Boeing. And then the ones in the red are the ones that are the most numbers of ATR above their own regression line 270. And these tend to be your relative strength winners, like Intel, Home Depot, Goldman, Cisco, and Procter & Gamble. And you can see some of the reward to risk ratios at 7-1 on a recovery play in like United Tech and McDonald's, and then 5-1 in Intel should it begin to falter. And then you can see the same information is provided for each of these 4 populations: the S&P 500 and the NASDAQ 100, S&P 100, ETF 100. Again, you can get some very interesting price ratios out here in the S&P 500. Once you leave the relative safety of the ETFs behind, you get a little more volatility that way. All right, that's everything I want to cover on the daily. I want to shift and just mark up some charts of interest now. I think I showed this chart earlier in the week. A really nice two-way street here on the swing trades in XIV. This green and red line marked up the location where we got short when it violated previous swing lows, and then I've already marked up this one to show you the 5 or 6 hour move on a return to fair value as defined by that 270. So that's XIV. And I really like this as a continuation pattern. I like this pullback to 40. And then if it can get above 43, there's a nice continuation trade here for intraday trading. I'm showing this on 2-hour charts, but you actually get this framework will also work intraday on the much tighter time frames. So as an example, this was Friday's move, and one of the reasons to enjoy the XIV VXX pair is when you find these turning points, you can get moves from 40, 50 to 42.50, so that's a 5% move. And typically we're using about 0.3, 30-cent initial risk on these, and so that sets up each of these legs now becomes a very favorable tradable target for the intraday trade. But even as we showed previously on the 2-hour chart, you can get some nice swings inside that time frame as well. All right, so I wanted to take a look at U.S. Steel, which was number 1 in that blended monthly rebalancing. Let's see what X looks like here. Now, what makes U.S. Steel attractive here as a trading vehicle is you have this nice gap established, and it's had 3 days to violate its swing low, but it has done nothing but go up. So that looks pretty favorable. If we do get a violation, the fair value is already here at 33. And so what that is suggesting is that the market believes in whatever caused this gap to go up, the market is voting in that direction. So U.S. Steel is a chart of interest. Let's take a look at Intel. Whoa. That made the dogs jump. All right, so this is interesting in Intel right here, this 2-hour swing chart. We've actually had one nice recovery already in it, but you can see it's had two lower highs. If this does not hold, if this support level here at 32.50 doesn't hold, then the price gets down to 30.5 pretty quickly. So you can frame a nice reversion to the mean trade as people try to preserve their gains in Intel. But if we should get a favorable market move, and then you get a price above about 34.80, then off we go to the upside. So you have, this is a nice critical state here in Intel. It doesn't take much to get long. It doesn't take much to get short. You might want to wait till it gets below 32.40. If there was a lot of market meltdown and this started dropping, that might be a reasonable short-term play. And what you're doing there is trading in the direction of the Intel owners that have been enjoying this profitable move and are trying to lock in their profit. That's what could cause this to fail quickly. But otherwise, Intel has been an exceptional winner, and so you don't want to stay short on that one too long. Okay, we wanted to look at Cisco. That was both a channeling and an overreaction. Yep, you can see why. Now Cisco has been part of this tech bounce from 22.5, and so folks were enjoying that up to 26. You know, so that's a 20% move, but it's had one leg of failure, a hesitation, a second leg of failure, and now found a 50% retracement. So this actually makes it really makes it at a very interesting space here. So the last move was this gap up to 24.20 from the last fair value down here around 23. If this doesn't hold, it's going to close that gap pretty quickly. and that sets up a nice short, which would be a high payoff target. If the market shows weakness and tech shows weakness, that combined with the 270 rolling over, that makes this a very nice short. If the market holds support on Monday and tech is going up faster than the market, and if Cisco starts rebounding, you have a really nice low-risk trade in here with a stop around 24.20, an entry anywhere in here, and then a price target at the RL270, which is about 25.60, which gives you about $1.20 to work with for potential gains. So that's a really nice position for Cisco for bi-directional trading. Okay, those are going to be my primary targets for tomorrow, and so I've got a few minutes yet. If there are other charts of interest you'd like to take a look at, we can certainly do that. You might want to look at Brazil. Brazil's been having a hard time getting out of this out of this sideways quiet channel here, but I will observe that the last two swing lows have been higher than the previous two swing lows, and we've got swing higher highs each time, so we do have kind of a cycling index here, but generally pointing up, and I would look at the channel as up. And so this still looks favorable to me. It's still one of the stronger ones. I think if we get more strength in the emerging markets and the BRICS, and if Brazil is doing better than the S&P and both are up, I think you can jump into Brazil for that short-term intraday trade and then grow that into a swing trade. And then should it get above 52, then you're off and running free and clear, and you could see another move like this last one. So that would be to me be the favorable way to trade Brazil. I really like this. We have found it near support on the bottom of this upward sloping channel, and we have a favorable move in either direction. If Brazil cracks, you're looking at 45, then a 50% retracement down to 43. And the last fair value at 40. So there's some nice moves on the downside in Brazil as well. It's going to be more volatile than the U.S. Okay. Any other charts of interest you'd like to take a look at before we pack it up? TWX. Okay. While this is loading up, I would just point out Mike Dungy, who's our good friend in Australia, has some ideas about how he's been using the blended monthly rebalancing in his longer-term accounts. He's been doing a superb job the last 3 to 5 years with the swing trades. I think I've shared some of his emails, and he asked me to see if there was folks that would be interested in BMR. And I think the best way to do that is to I've added a room in the chat room titled BMR. I wouldn't expect it to have as much traffic as maybe the swing trades and the dailies, but that looks like an easy way to do some collaboration that can be searched. So I would say if you're interested in the BMR, go to the chat room that's labeled BMR, get yourself identified in there, and then we'll try to build we'll do a distribution list for BMR folks, and then and try to reinvigorate the discussion. Okay, so here we have TWX now, Time Warner. I like the except for this, except for that gap breakout here. If we just extend the regression line, price pulled back to something like projected fair value there, so generally upward. We have some people that will sell if this price appreciation, if this rebound continues and gets through the RL. there's going to be people selling around 85 and 89 trying to get their money back. So I would treat TWX here strictly as a short-term tactical play, aiming for about 82 on the regression line, with a stop down here around 73. So I think you can frame about a 2-to-1. You know, if that's one risk, there's 2 rewards just back to the regression line. And then if it gets through there, I'm going to be looking at 85 and then 89. It really has to get through 90 to be off and running. On a failure here, you know, you're looking at looks like what was it, 68 and then 65. So yeah, TWX has some possibilities. I would see it really as a tactical play. You've had 2 emotionally challenging events in the last 5 or 6 days here. That big gap up and a sudden spike, and then a collapse all the way back down, and then another sharp rebound here on Friday. And so I think I would be surprised if it now had an orderly move. I still would expect there to be some more volatility when it gets near those price targets around 82, 85, 88. But again, if you can get above 88, you're good, and that's a far enough move from where price currently is that becomes tradable on a swing basis. So that's my take on TWX there. And again, what I'm looking at right there is the 2-hour charts, and looking at about 4 or 5 months. I really like the 2-hour charts in terms of swing trading. I think it shows a little more fidelity to what's going on. Okay, any other symbols we'd like to look at? We got time for about one more, if somebody's got one. Okay, looks like the ayes have it. So look for the BMR room. Get yourself registered in there so we can activate some discussion on the longer term. Mike Dungy's got some very interesting ideas to share about a core and satellite technique. And I think that's the next level of refinement in blended monthly. So the soccer team thanks you guys for your support. You'd have been so proud of those girls the way they played so hard this weekend. And boy, all you got to do is just encourage them and believe in them and show them a few things, and they do the rest. So keep being positive out there. There's more than enough things to be negative about. Really want you concentrating on those things that make a difference and figuring out how to do more of those. Just take the negative stuff as the cost of doing business. Don't let it get you down. Keep looking to add value. Find those things that are working and add to them. Take good care of yourself. And just keep thinking about them and pay it forward with the people in your area. We're doing pretty good with the team. They feel the emotional support, and your support of the business helps support them. So you guys take good care, and we'll see you in the chat room. I picked up a laptop and a tablet this weekend to see if I can figure out a way to use them at work without violating any of the terms of agreement with the college. I was promoted to associate professor up there, so I have a nice meaningless honorary title to add to my long list of trivia. So we'll see you in the chat room. You guys keep up the good work. Get in there into that chat room, by the way, and help Heather. Heather and Catherine are doing their best to keep the things moving in my absence. I'm trying to get the swing trades that I'm doing posted in there, but don't miss the opportunity to work with the community. There are people that are reading that and need you guys in there framing your ideas, posting one chart a week. That is going to improve your technique better than any single thing there is. And then for those of you that are interested, we have that We're going to do a live workshop out here in Kansas City in November. And yes, Lisa, I've noticed that, and it's working. I think you're getting better from what I'm seeing on the charts. So get the workshop in November. Send me a note if interested, and we'll get you rolled in. Anyway, take good care and keep up the good work.